Welcome back to the Thinking Crypto channel, your home for cryptocurrency news and interviews. I have big news to share with you all, my friends. We have Credit Suisse weighing in on the Russia-Ukraine situation, saying once this war is over, we're going to see money and currency change forever, talking about Bretton Woods 2.0. Remember, we've been talking about that for years, right? The token economy, the digital economy, the World Economic Forum has been calling for it. Money's changing right before our eyes, guys. So I want to break down what they have to say. And also, we have Goldman Sachs. They're about to open up Ethereum investing to their clients. This is per an SEC filing. We also have a venture capital firm jumping in, raising over $500 million to invest in gold. No, my friends, to invest in crypto. We're just seeing funds popping up everywhere, and they're raising a ridiculous amount of capital to bring to invest into this market. And we have Elizabeth Warren. She put forth a crypto bill, and of course, it's heavy-handed, it's draconian. And I want to share what that is and what she's trying to do and what others are saying about it. Before we get into it, please go ahead and hit the thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, earlier today, I uploaded my interview with attorney John Deaton, and we talk about the latest as to what's happening with the SEC Ripple lawsuit. You don't want to miss it. I'll put a link in the description. Also, tomorrow, my interview with former SEC Commissioner Joseph Grunfist will be published. You don't want to miss this one. Obviously, he is well-versed on the SEC. He used to work there. He understands the inner workings and so forth. We touch on Bitcoin spot ETF, the SEC and crypto regulations, the Ripple lawsuit, and much more. And remember, he's the one who sent the letter to Jay Clayton and the commissioners telling him not to file the lawsuit against Ripple. So once again, you don't want to miss it. Make sure you got the notification bell enabled and you're subscribed if you haven't already. Quick word from our sponsor, and that is TaxBit. TaxBit is the leading tax service provider in the crypto industry. It is a service I've been using for years and will be using this tax season to calculate my crypto gains and losses. They make it so easy. You connect your exchange accounts, it pulls the data out, and then you can print out the forms and submit it to the IRS or to your accountant. It is pretty cool and very easy to use. It's a service I highly recommend. Once again, been using it for years and it makes my life so easy. So if you'd like to learn more about TaxBit, check out the link in the description. Now let's take a look at the market here. Bitcoin is back over $39,000. It's essentially moving sideways, just bouncing around. We're kind of in no man's land right now. We're waiting to see what the hell is going to happen next. And, you know, I've been following kind of Bitcoin's movements and showing you guys on the charts. It appears to be moving the same way we were moving in summer of 2021 in that downward trend corrective phase. But, you know, Bitcoin at any point could break out upwards and then we head into the retracement. And tomorrow, obviously, it was reported that Biden's crypto executive order may be coming. And I say maybe, it's not guaranteed. And that, I believe, will be positive. Hopefully, it's not negative. But from what I've heard and the people I've talked to at the Blockchain Association, could be positive. So we will have to wait and see. I hope it's positive and it sends the market in an upward movement and we move into an upward trend versus continuing the downward trend. And hopefully, you know, Bitcoin can find a bottom here. But at the same time, you know, none of this is guaranteed and we just got to be patient and let the market do its thing. And there's obviously a lot of uncertainty in the world with the Russia-Ukraine situation. Macro level, you know, we are still on track as to Bitcoin's retracement, and some are calling for higher prices to move towards a blow-off top. You know, these respective tops that we see with $64,000 and $69,000 respectively. Some are calling them local tops, but you know, we'll have to wait and see, guys. There's a thesis out there, which I've shared. It's either Bitcoin goes to the retracement of 55, 58K, then goes into a bear market, and then we have alt season, or there's still a blow off top we have to head to, and that could happen later this year. But, you know, right now, one analyst shared this following chart, and it said the following: observe sideways consolidation in a bull market. In my book, it can be called nothing else until the 1.618 is broken. So once again, we're in that no man's land, and we just have to wait and see what Bitcoin does next and which respective thesis will play out next. So let's jump into the news. All right, banking giant Credit Suisse report. They put out a report, and here's what it had to say. After this war, money will never be the same. Bitcoin will benefit. And here's a snapshot of it. They said when the crisis and war is over, the US dollar should be much weaker. And on the flip side, the renminbi much stronger, backed by a basket of commodities. From the Bretton Woods era, backed by gold bullion, to Bretton Woods 2, backed by inside money, treasuries, and unhedgeable confiscation risk, to Bretton Woods 3, backed by outside money, gold bullion, and other commodities. After this war is over, money will never be the same again. And Bitcoin, if it still exists, then will probably benefit from all of this. So, guys, we've talked a lot about Bretton Woods 2.0, right? We had Bretton Woods after World War II, and everybody went on the gold standard and so forth. And now we've been seeing for maybe about a few years, the World Economic Forum has been calling for Bretton Woods 2.0. And we've talked about it on this channel that it's going to be CBDCs, and crypto is going to be a part of that, right? You're going to have basket of currencies, you're going to have digital assets. We are headed to the token economy, and you have a bank validating what we've been talking about for years. And I think it's coming. It's pretty clear which direction the central banks are headed in, the economies, and this new technology. It's going to be what the World Economic Forum called the fourth industrial revolution. And once again, if you've been studying it and following the news and seeing the movements of governments and the private sector, they're all moving in the same direction here. So we're still early in the adoption curve, and there's big things ahead. And this is why I always stress or preach that you guys should have a macro level view on the asset class. We're still very early. Obviously, you take your profits. I'm not saying you shouldn't take profits, but also just have a long-term outlook, especially when the market may not go according to plan, as we're seeing right now, right? Case in point. So we just got to be patient because big things are ahead. Now, look at this. Goldman Sachs is offering clients access to an Ethereum fund. So they've been jumping in, offering their wealthy clients Bitcoin investment access, and so has JP Morgan and so forth. So the bank is introducing crypto-curious clients, the Galaxy's institutional crypto fund SEC documents show. So this is Galaxy Digital, owned by Mike Novogratz. And it's a sign of what's to come, guys. They're going to go from Bitcoin to Ethereum and then other altcoins. We've seen it time and time again. And this goes back to the patience item, right? They're going to invest in other cryptos, but they're going to crawl, walk, and run. So Goldman Sachs is offering interested clients access to an Ether fund issued by Galaxy Digital, according to regulatory documents filed with the US SEC on Tuesday. A source from the world of institutional crypto trading confirmed to CoinDesk that Goldman acts as a feeder to the Galaxy Fund. The amended Form D filing states Goldman Sachs & Co. LLC will receive an introduction fee for clients it brings to the Galaxy Institutional Ethereum Fund. Galaxy issued that fund last March. With a $250,000 minimum investment, the fund has sold over $50 million to 28 clients, filings show. It's difficult to say how much, if any, flow Goldman is responsible for, as the investment bank was not involved when it first launched. Now, Mike, as you all know, is a Wall Street guy, obviously a billionaire, very successful, and he has a lot of connections to Wall Street. So I'm sure this was very easy for him to go pitch it. And it just, once again, a sign of things to come, regardless of how you feel about Mike or Goldman Sachs. And I have my personal feelings, but we're talking about the facts and the news here. And this is just the tip of the iceberg. There's more to come. BlackRock and JP Morgan and all the other banks are going to jump in. And once again, starts with Bitcoin. Bitcoin is the doorway. They then go into the altcoins, and usually they do Ethereum. And as we get more clarity in the market from the SEC and Congress, you're going to see more diversification and more altcoins being added to their these bank portfolios and investment offerings. So very bullish news and just a sign of what's to come, my friends. Now look at this. Spain's largest bank, Santander, to offer loans backed by crypto assets in Argentina. Now, the great thing about the crypto asset class, it's global. And that means money can come in from anywhere, from the largest whale to the smallest retail investors, guys. That's what makes this asset class unlike anything we've seen in the history of the world. And it's all verifiable and on the blockchain. It's globally distributed, right? And it says here the loans will be backed by tokens based on agricultural products such as soybeans, corn, and wheat. And it's just interesting because we know wheat has been going crazy on the charts, right? But it's just amazing what's going to come out of this asset class, all kinds of creative financial products. And it says here that, there's going to be essentially token, it says, agro token, offers stable coins that each represent a ton of stored grain. These include soy, corn, and wheat. Each token's value is pegged to the price of each commodity in US dollars. The firm has already undergone a pilot project with producers in Argentina to validate the product, Santander said. And look at this, my friends. Agro Token says it has a multi-chain infrastructure with a platform built on Ethereum, Polygon, and Algorand. Wow. So some of you may say, I don't care about no agro coin and, I don't care about wheat coin and corn coin, right? Me too. But what's important, my friends, is the token economy, tokenization of commodities and assets and securities on the blockchain. And they're using Algorand, Polygon, and Ethereum. I hold Ethereum in my portfolio. I own some Polygon Matic as well. And of course, Algorand, which I've been very bullish on. And I've been accumulating in the dips. I'm very bullish on Algorand. I haven't been accumulating more Ethereum or Polygon, but Algorand I have. And that's not financial or investment advice. But the more these blockchains get adoption and there's more building on them, the more valuable the network becomes, network effect. And the tokens that are run on them, Algo, Ether, Matic, will have the benefits of it, right? And increase in value. We've seen this already, specifically on the Ethereum blockchain with NFTs and different cryptos being built on that, like the basic attention token is an ERC20 token, yada, yada. You guys understand the tokenization that's happening and the value it brings to the network. So all bullish news and a sign of what's to come. Imagine every country around the world starts doing this. Tokens tied to commodities and assets and so forth, guys. Big things ahead. Now, speaking of big, look at this. Bain Capital Ventures launches a $560 million crypto-focused fund as ecosystem booms. The team will deploy the capital across 30 new companies or protocols, the firm's managing partner told Blockworks. Guys, if you've been a subscriber or a viewer of this channel or listening on the podcast, we've been covering so much investment news of capital being raised, billions of dollars. I've been saying if you aggregate and total this up, we're already in the trillions. There's so much capital coming in, guys, and they're investing in the companies that are building the infrastructure, the picks and forks, right? And then they're investing in the tokens as well. And, when I see stuff like this, it makes me so bullish. And remember, you got to really think about the business aspect of this. They're raising funds from investors, and those investors want a return on their investment. How do you get a return on the investment for both the companies and the tokens? The value of the tokens have to go up, and that's a huge incentive that brings more people into the market, right? They see the prices go up, they want to make money. That's usually how people enter the crypto market, right? They see the prices, and that intrigues them. Just think about your own personal journey. And then you learn about the technology and the use cases and the benefits and how it's going to change the world. So all of these things, many of you have played it out and lived it out. Well, guess what? We haven't hit mainstream adoption yet. And that's what they're betting on. That's why they're putting all this money in. They know they may have to wait a few years to get a decent return. And I hope you are also looking at it that way. Now, I certainly understand it depends on your entry point. How low did you buy, right? Some people bought the tops and they have to wait for the next top, right? For higher prices to make a profit, but that's okay. Patience is the key. We're still very early. So Bain Capital has about $155 billion in assets under management. The fund was oversubscribed by a little bit, but in the classic spirit of Bain Capital, we started with a modest fund size and plan to expand significantly from here. Alex Evans, a partner at Bain Capital, told Blockworks. Guys, it's amazing what is happening. These folks who are in traditional financial investments, tech investments, are now jumping into crypto, raising millions and getting ready to put that money into crypto companies as well as the tokens. So the capital will be invested mainly in crypto-focused infrastructure and DeFi. The team will assemble a portfolio of 30 new companies or protocols to invest in across the fund. And it says here, let's see if there's any important item that I need to call out. Bain has invested in 14 DeFi, decentralized finance, and crypto infrastructure businesses to date, including B2B infrastructure platform Zero Hash, asset manager Parify Capital, and crypto lender BlockFi. In general, its venture arm invests anywhere from $1 million of seed capital to $100 million in growth equity. Pretty amazing what is taking place. And, this is not getting major news coverage on CNBC or CNN or Fox Business or something, right? This is why I built this channel and this podcast, so you guys can keep in touch with what's happening in the market and all the capital. And it's not what they're saying, it's what they're doing. And they're raising money to invest in the asset class, despite the market volatility and the uncertainty we see in the world right now. You have to have the macro view. I hope that's resonating with you guys. Let's move ahead. So as always, crypto is global. Thailand approves pro-crypto tax rules where trading is exempt from a 7% VAT and 15% withholding tax. Also, the new rules allow traders to offset annual losses against gains. We are seeing every government around the world making some sort of move around crypto, building a CBDC, providing clear regulations. Some of them are trying to grab as much innovation and business as possible. So they're creating really great tax-friendly rules to invite more people to come into the country. And that's happening amongst different states in the United States as well. They're competing. And that's what I want to see, guys. I want to see competition because they are all seeing what's ahead in the adoption and the amount of money that can be made in this crypto market. Now, let's end it here with Elizabeth Warren. So she put out a bill to ensure crypto can't be used to evade sanctions. One of the provisions would make it easier to verify customer identities and transfers to private wallets by enforcing detailed record keeping and reporting. Now, I've been on the record, I believe in sensible regulations, not heavy-handed or draconian. You can't stifle the innovation while trying to, under the guise of trying to protect investors, you can't stifle the innovation. Some things we're not able to stop. And I'll give an example with the internet. So the internet in its early days, if they came out heavy-handed with draconian laws, we wouldn't have Google and these companies. It would have been very hard for them to start and get things going. But we found a balance, right? We found a compromise. Yes, we want to stop the bad actors, but we also don't want to stifle innovation. And look, were there child pornography websites and content about child pornography and all kinds of stuff on the web? Of course, right? And I don't like that. And many of you, obviously, we don't want that. But if you were trying to stop that outright, it would be very hard, and you would have to put draconian laws in place to do that. But they didn't do that. There was a balance. And yes, you police the internet as best as you can and kick off the bad content and so forth, right? So same thing with crypto. Are there bad actors using crypto to do nefarious things? Of course. There have been bad people since the beginning of time, right? Who are trying to do bad things and trying to game the system and break the law. And they use whatever medium is available, right? And they look, how have people laundered money and made drug deals and so forth? It's been in cash, right? Now there's crypto, so they're going to use a bit of crypto. Now, obviously, certain cryptos are trackable, right? You know, Bitcoin, you can trace wallets and so forth. If you use privacy coins, you can get away with a lot of stuff. So my point, and my long-winded way of saying this, is that she's trying to do draconian regulations, which is going to hurt innovation, and using small problems that, oh, this person maybe bought some drugs with crypto, or that, you know, potentially Russia and these countries can evade sanctions. We've seen the folks at Ripple, you know, put out facts and say there's not enough liquidity to do that. Could they take a small chunk of the capital and try to avoid sanctions with that? Sure, of course. They can also use gold and other things, right? So my point is, she's just trying to bring out draconian laws because she's certainly a puppet with Gary Gensler trying to slow down the banking, trying to slow down crypto because it is disrupting the banking cartel. And Congressman Tom Emmer weighed in on this. He said, another bad take: U.S. regulated crypto exchanges are compliant with sanctions. That fact alone highlights the need to foster crypto innovation domestically and not push it offshore. He said, crypto is one of the only ways to securely and reliably get funds into Ukraine. Great point. Let's focus on that and not spew misinformation that has been discredited by Treasury officials. So once again, I don't trust her. I think she's a clown. She's a hypocrite. I think not just with crypto, but with other things in our private jet and so forth. I don't trust her. And she comes across as a slimy politician, in my opinion. So hopefully this bill doesn't make it anywhere, but we know the three peas in a pod are Gensler, Warren, and Yellen. Watch those three. They are not trying to find a balanced approach to crypto. They're trying to slow it down or kill it. And we know they're buddies, right? Especially Warren and Gensler. So the great thing is, I believe she's outnumbered. There are more members of Congress and some in the Senate that are pro-crypto, right? We're seeing bipartisan support, both Democrats and Republicans. So just want to let you guys know about that. And you know, hopefully tomorrow we do see Biden's crypto executive order and what he has to say. And hopefully the markets can start moving upwards, my friends. You know, right now on the weekly chart, just to go back to this, you know, Bitcoin's green candle, there is a green candle essentially on the chart right now. But once again, that doesn't mean anything. You could end the week in a red, but fingers crossed, we get some good news and things start moving upwards. But we'll have to be patient and wait and see what happens. Anyway, let me know what you guys think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.